Why do 90% of traders lose money? Not because they don't know how to read charts. Not because they lack strategies. Not because the market is rigged. They lose because of this. Pause their own mind. Mark Douglas spent 20 years coaching traders and discovered something shocking: the best strategy in the world is useless if you can't execute it consistently. This is Trading in the Zone, the book that reveals why you sabotage yourself and how to fix it. If you trade stocks, crypto, Forex, anything, the next 12 minutes will change your results forever. Let's go. The brutal truth. Here's what Mark Douglas discovered. Trading is 10% strategy, 90% psychology. You already know this is true. Think about your last losing trade. Did you follow your rules? Probably not. Did emotions take over? Definitely. Did you regret it later? Absolutely. The problem isn't that you don't know WH80 to do. The problem is you can't make yourself do it consistently. Why? Because your mind is working against you. It's programmed for survival, not for trading. Let me explain the psychology that's costing you money. The 5 fundamental truths. Mark Douglas says if you accept these 5 truths, everything changes. Truth 1. Anything can happen. Every trade can win or lose. Every single one. Accept this completely, or you'll be shocked and emotional when you lose. Truth 2. You don't need to know what happens next. You don't need to predict the future to make money. You just need an edge that plays out over time. Stop trying to be right on every trade. Truth 3. Random distribution of wins and losses. Even with a 70% win rate, losses are random. You might lose 5 in a row, then win 7. This is normal. Your edge only shows up over 100 plus trades, not 10. Truth 4. An edge is just higher probability. Your strategy doesn't guarantee wins. It just tips odds in your favor. Like a casino, they don't win every hand, but they win over time. Truth 5. Every moment is unique. Patterns don't guarantee future results. The market is dynamic. Stop expecting trades to behave like previous ones. Why these truths matter? Most traders logically understand these, but emotionally, they don't accept them. You say, well, losses happen, but when you lose, you get angry, revenge trade, or freeze up. That's the gap Douglas helps you close. The main problem: your beliefs. Here's the deep insight. Your beliefs about trading create your reality. If you believe, I need to be right, you'll hold losers and cut winners. Seth, market is out to get me. You'll see threats everywhere. Can't lose this money. You'll freeze and miss opportunities. Should have known. You'll beat yourself up and make emotional decisions. Most traders have these toxic beliefs. I need to be right. This is the deadliest belief. It makes you move stops, hold losers, and refuse to admit you're wrong. This trade must work. The moment you need a trade to win, you're in trouble. You'll override your rules. I know what's going to happen. Overconfidence after wins. Then you risk too much and blow up. The market owes me after losses. You think you deserve to win it back. This is revenge trading. The solution: replace these beliefs with, I'm executing my edge. This trade is just one of many. Accept any outcomelesses are just data points. Sounds simple. It's not. Your brain will fight this, because Douglas reveals something uncomfortable. The psychological traps. Douglas identifies the psychological enemies destroying your trading. Trap 1. Fear. 4 types of fear kill traders. Fear of being wrong. You hesitate, miss entries, exit early. Fear of losing money. You risk too small, can't pull trigger. Fear of missing out. FOMO. You chase, enter late. Lows. Fear of leaving money on the table. You hold too long. Give back profits. Trap 2. Greed or hope. When losing, you hope it comes back. You add to losers. You move stops. You ignore exits. Result: small losses become disasters. Trap 3. Euphoria after big wins. You feel invincible. You overtrade. You risk too much. You ignore rules. Result: you give it all back. Trap 4. Revenge after losses. You want to get even. You trade impulsively. You increase size. You abandon strategy. Result: even bigger losses. Here's what Douglas says: These emotions are normal. You can't eliminate them, but you can change your response to them. How? Through the probabilistic mindset. The solution. Probabilistic thinking. This is the core of the book. Think in probabilities, not certainties. What this means. Imagine you flip a coin 100 times. You know roughly 50 will be heads, but you don't know which specific flips will be heads. Trading is the same. If your edge wins 60% of the time over 100 trades, you know you'll win about 60, but you don't know which 60. The shift. Before, I need this trade to win. After, this trade is one of 100. My edge plays out over all 100. Before I lost, something is wrong. After, this is expected variance. I'm within my distribution. Before, 3 losses in a row. My strategy is broken. After, random distribution. This is normal. Keep executing. The mental freedom this creates when you truly think probabilistically. No single trade matters. Emotion analysis don't hurt your egoins, don't make you overconfidentio. Execute flawlessly because there's no fear. Douglas says, the best traders don't care if they're right or wrong on any individual trade. They just care that they executed their edge. That's the zone. But how do you get there? The 7 principles of consistency. Douglas gives you a roadmap. The 7 principles of consistency. Principle 1. Objectively identify your edge. Define exactly what gives you an advantage. If you can't explain it clearly, you don't have one. Principle 2. Redefine risk on every trade before entering. Know your max loss, stop loss, your position size, or your exact exit, if wrong, no exceptions. Ever. Principle 3. Completely accept the risk. This is the game changer. Before clicking buy, ask, can I lose this money without emotional reaction? If no, don't take the trade. If yes, you're accepting reality. Now, you can execute without fear. Principle 4. Act on your edge without hesitation. When your setup appears, you execute. No overthinking, no doubt, no hesitation. Why? Because you've already accepted the risk. Principle 5. Pay yourself, take profits systematically. Don't let all profits ride. Take some off the table regularly. This builds confidence and keeps you trading rationally. Principle 6. Monitor your error track. When you break rules, what emotion caused it? What were you thinking? Errors reveal where your beliefs need work. Principle 7. Understand these are necessary, not optional, not suggestions. Necessary for consistency. Skip even one, and you'll sabotage yourself. Douglas's point. Follow these principles religiously for 6 months. They'll rewire your brain, but there's a critical step most traders skip, the mechanical stage. Douglas recommends starting with mechanical trading. What this means. Trade a simple, rule-based system with 0 discretion. Setup appears. Enter stop. Hit. Exit target hit. Exit no thinking. No analysis. No, this time is different. Why this works? You're training your brain to execute without emotion, accept losses without reaction, follow rules, consistently think probabilistically long. Douglas says minimum 20 trades, ideally 100. What happens? After enough mechanical trades, fear of losing disappears. You've lost many times. It's fine. Need to be right disappears. You've been wrong. It's just data. Hesitation disappears. You've executed so many times, it's automatic. Then you can add discretion, but not before. The mistake. Most traders never do this. They trade discretionary from day one. Result? Inconsistency. Emotional decisions. Blown accounts. Douglas's advice. You must learn to trust your edge before you can trade it profitably. The mechanical stage builds that trust. Now, let me give you the practical application. Practical implementation. Here's how to actually apply this. Step 1. Define your edge. Week 1. Write down exact entry criteria, exact exit criteria, win and loss position sizing rules, risk per trade 1-2 max. Step 2. Practice risk acceptance. Week 2. Before every trade, say out loud, I accept that I might lose X on this trade. I'm okay with that. If you feel any resistance, don't take the trade. Step 3. Start mechanical trading weeks 3-8, take 20-50 trades following your system with zero deviation. Track setup appeared, executed, follow rules. Result, win or loss. But don't focus on the step 4. Journal emotions daily after trading. Write, what emotions did I feel? When did I want to break rules? What beliefs surfaced? Did I accept risk completely? Step 5. Review statistics weekly after 20+ trades. Review. Win rate, average win versus average loss, biggest mistake patterns, emotional patterns, focus on execution, not P&L. Step 6. Gradual transition weeks 9-12. Once you can execute mechanically without emotion, slowly at discretion, but always follow the 7 principles. The zone. What does trading in the zone feel like? Douglas describes it. You're completely present, not thinking about past trades or future profits, just executing now. You have no fear, because you've accepted every possible outcome before entering. You have no hesitation. Your edge appears, you execute automatically. You're detached from results. Winning or losing a trade doesn't affect you emotionally. You're in flow. Trading feels effortless, natural, automatic. You trust yourself completely. No second guessing, no doubt. This isn't mystical. It's the result of accepting the 5 fundamental truths, following the 7 principles, consistent clearing beliefs through experience, evil and probabilistic thinking. Douglas says, trading in the zone is available to anyone willing to do the psychological work. It's not about talent. It's about training your mind. Most traders never get there because they focus on strategies instead of psychology. Don't make that mistake. Final summary. Let me summarize trading in the zone. The problem, your mind, is sabotaging your trading through fear, greed, and toxic beliefs. The solution? Accept the 5 fundamental truths, develop probabilistic thinking, follow the 7 principles of consistency, start with mechanical trading at risk before entering trades. The result, you trade in the zone consistently, emotionally detached, and profitably. The bottom line, you don't have a strategy problem, you have a psychology problem. Fix the psychology, and the profits follow. Your action. If you trade, read this book, then do the work. Define your edge, practice mechanical trading at risk, completely track. Your emotions, follow the principles.